Kitco News special coverage of Bitcoin 2022 is brought to you by Coin Payments. Crypto payments made easy.
We're back in Miami at the Bitcoin Miami conference, and in person this time, Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Welcome back.
Thank
You're one of the
you.
more popular guests we have on the show. Always great to see you in person. This is the second time we've done it in person.
That's right.
First time was in Dubai a couple months ago at another Bitcoin conference, and now we're in Miami, the biggest conference in the world for Bitcoin. I'm going to start by play a little game, all right? True and false, you know the rules. Okay, if it's false, justify as to why it's false, okay? Number one, Bitcoin's going to the moon.
True.
Okay, I see what you did there. Bitcoin's going to the moon in 3 months.
False.
False.
Yeah, so as you know, David, I really love cryptocurrencies. I love Bitcoin. But it takes time. You know, it's like a child, right? So Bitcoin, you could argue that was a toddler, then it's an adolescent, then it has to grow into an adult. And so eventually, yes, I see it being the future. But I'm probably one of the only people here that thinks price is going lower before it goes higher.
We are going to get to your most recent price forecast, because every time I talk to you, there is a bit of an update. You know, price moves very dramatically all the time. Now, Bitcoin and stocks, do you trade them differently? Do you use different technical indicators when looking at Bitcoin versus, let's say, the spider?
No, to be honest, pretty much the same stuff. You know, for the most part, when it comes to stocks, most of my money is in stocks still. And the reason I do that is because there's more opportunities for a swing trader, right? So a swing trader wants to be in and be out relatively quickly. With stocks, you have stocks that are going up on earnings, down on bad news. You get a lot more opportunities. With crypto, it's a little harder to find that because everything trades mostly along Bitcoin's lines, right? So if Bitcoin's down big on the day, it's very rare to find a cryptocurrency that's a big one that's going to be up in counter trend. So for the most part, I trade the same indicators, but it's just different amounts of money.
Now, Bitcoin does have a much different volatility profile versus, let's say, the S&P 500 or even tech stocks.
Yeah.
Bitcoin has very closely followed the NASDAQ, but just on a more leveraged level. So do you change the bands that you look at? Do you change the the moving averages that you use applied? I mean, the principles of technical analysis are still the same, but the specific indicators, do you change them for an asset with a different volatility profile?
You know, so I don't change them. I still use like the 200 is what Bitcoin just hit recently, and it pulled back beautifully off of it. That was around 48,250,
right.
And it pulled back. And I do use the 200 on stocks, but there's a difference, right? So you have to understand that cryptocurrencies have a much bigger volatility factor than most stocks. Like, even though market cap wise, you could say, okay, well, Bitcoin is an Apple or a Microsoft, or obviously a little bit smaller in market cap, but you don't see flushes overnight.
Right.
In Microsoft that dropped 20%. And you can see that in Bitcoin. So as a trader, I have to be fully aware of that and play it differently, slightly differently.
Yeah, so if I'm trading and I'm looking at historical precedents, let's say the S&P 500 sold off 6% today, I'd be like, Gareth, that's a huge buying opportunity. Maybe that's the beginning of a crash. But I would look at that and say, that's probably really dramatically oversold. Doesn't matter what the trend is, a 6% move in the SPY is not normal. Now, the same thing happened for Bitcoin. You probably wouldn't react the same way. And that's what I'm saying. You know, the indicators you look at for Bitcoin and something like the stock market, in theory, should be very different, because you would react to percentage changes, the same percentage changes, you would react to them differently, right?
So the amazing thing about it is that when you're looking at a moving average, for instance, and I'll just use a moving average as a general, marker point, is that Bitcoin is going to mark the 200, and it's taking into account those volatile moves all the way along.
Right.
So a stock would not have that. So you actually have very similar things. And remember, charts are representations of human emotion, right? So when you have a buyer and a seller, they're creating upticks and downticks in a chart. So really, when you're trading stocks, you're trading emotion. You're trading human emotion of greed and fear, which makes it almost perfect for us just recognizing, shutting everything else out, and then just looking at the charts. And again, I've gone on record with you in Dubai, right, when we were at 65,000, and I said this isn't a breakout. And the charts were telling me that, right? Everyone else said it was going to go to 100,000 in a month. And the same thing recently at 48,250, we hit major resistance. I recognize that, and again, that means Bitcoin is likely going to pull back. So it's really the same because you're trading human nature, right? So again, what makes you angry, right? What makes you angry probably makes the same other people angry, and you're going to react the same way, just like me.
Losing money makes me angry.
That's what it is, right? Which is why when things drop significantly, you see people starting to get angry, and then they end up selling more, and you see these kind of flash crashes in cryptocurrency.
Right. I like to talk to you about some of the trades that I've been making,
boy.
because I learned a lot from you. I actually, follow a lot of your swing trades, because I talk to you and I get
Nice.
free advice, everybody. But if you sign up to a service, you get even better advice. There's a plug right there. But anyway, Gareth, I sold my position in Bitcoin about, or half my position about a month ago.
Mm-hmm.
Now, back then it was about $40,000 or so. So I've lost a bit of upside, but I'm still on cash. I'm in the sidelines. When do I get back in?
So there's going to be good support at 40,000 again. If you're a quick trader, you can jump in at 40,000 and play it maybe for like a $3,000 or $4,000 bounce. I would say this: what is your time horizon? What are you looking to do? Are you willing to be in and be out quickly, or are you looking to hold something for months?
Okay.
Sorry to turn the interview around on you. I'm not trying to.
Okay, so personally, I've got 50% of my Bitcoin position I swing trade.
Okay.
So like you, I don't maybe trade as often, but whenever it goes down to a low, basically whenever you give me a floor, like that's 30,000 or 32,000, I'll buy that, and I'll just hold it until it goes up maybe 10-50%, and I'll just sell it off, and then I'll repeat the process. So it's volatile enough for me to just buy relatively low and sell a little bit higher. I don't wait for it to go up 50%. I just wait for it to go up 15% or so.
Yeah.
Now, the other half, I literally don't touch.
You hodl.
Yeah, I hodl. I bought it some time ago, and I just don't touch it.
Okay. So what I would do is if you have that in cash and you're willing to swing trade it, start looking at 40,000 as a floor. If it breaks 40,000, you have some downside, but for the most part, I would expect support at 40,000 and a bounce back to about 44 to 45,000. So I think you can look for that. Now, just be ready. Remember, as a swing trader, you can't kind of just say, well, if it doesn't happen, I'm just going to ignore. You have to be ready to act. So that would be my level.
From 40,000, let's say I buy a 40,000, I'm waiting for 44,000, like you said. Now, what if I tell you, Gareth, 10% is not enough for me? I want a little more. Do I wait after 44? Like, how does this work?
Well, so it's going to 20,000.
I'm being greedy here because I'm trading cryptos.
Well, and you can't be greedy in this scenario, and I'll tell you why. Is because ultimately the bear flag is in the chart. All right, you have a major cycle top here. You have all the makings of downside price action. The fact that we even fell off the 200 moving average and stayed within the channel that we talked about before tells you that everything on the bearish case for the midterm is intact. So again, if you're willing to be in and be out for 10%, then be ready to do that. If not, I would say sit on the sidelines. You'll get a much, much better entry when you break down and go 20 or sub 20,000.
All right, let's.
And by the way, you might want to. I mean, I know you're hodling some of it, but yeah, it's got 50% downside. So just. Now, by the way,
but the other half is just cash. Right? I'm waiting for it to go down to 20,000. This is my philosophy, and please tell me if you disagree with you think my approach is. I'm obviously not as experienced as you are. But the reason I hodl is because I realize I'm not a very good trader. I can't time tops and bottoms as well as somebody like you. And I don't want to take that risk. I don't want to pay, my expenses on my trades, and I don't want to just mistime the markets. And so if it goes down 50%, you know what? I'll buy more with my cash, and then I'll make it up. Maybe I'll just, break even at the end of the day. If it doesn't, maybe you're wrong, or maybe I'm wrong.
I could be wrong.
And it goes up, at least I've got that position ready to take profits on. So that's the way I see it.
And honestly, that's a great way. And I think it's important for everyone watching to understand that if you're a long-term believer and not a swing trader, there's nothing wrong with dollar cost averaging in, right? I mean, if you pay here at 43,000 where we are now, and it goes down to 40, you could buy a little bit more. If it goes to 35, and just continue to do so over the course of that period, since ultimately I do believe it's going to 100, 500,000, and even more down the road. And again, I think that's years away, but I do think it is heading there. So in that respect, if you're not willing to swing trade, I would just keep that in cash, keep it in kind of reserve, and then hold what you're hodling right now.
I've got more of a philosophical question for you. If you're bullish Bitcoin long term, $500,000 is a lot. That's 10x from here, at least.
Yeah.
Why don't you just hold it and don't touch it? I mean, why go through the I know you're a good trader and you've made a fortune trading, and your subscribers have as well. But if you're that convicted in the long-term growth of an asset, why go through the hassle of timing tops and bottoms? Wouldn't you just feel more comfortable and secure if you just leave in there and maybe trade something else that maybe doesn't have long-term potential, but something volatile that has short-term potential?
Yeah, so the two things I hate the most is being down on a trade. So if I buy it, let's say 40, and it goes to 20, that's going to bug the hell out of me.
Yeah.
The second thing I hate is time, right? Okay. Time is money. So for me personally, because I'm a trader, because I know how to read the charts, I'm aware that it doesn't make sense for me to kind of just sit in something for, let's say, 2 years before I come back in the money and start seeing that move to 500,000, because I can trade in and out 10 million times, not 10 million times, but I can trade in and out multiple times and make up way more money in the near term. So for me, it's just my style, and I think each individual investor needs to decide what is their style. Do they know enough? Like you said, you're not a trader. You might follow me a little bit, but for the most part, I think hodling a little bit is fine.
Okay. So what's your price target now? I was going to ask you that.
Yeah.
40,000 is the downside, 44 is the upside.
That's near term. That's just very near term bounces.
Medium term then.
Medium term is 20 or sub 20,000 still.
Okay, you're still
and I've been
holding
consistent.
that.
I think in Dubai is when I first unveiled that price target to you, and I stick with it because the charts haven't changed. Now, I do want to be clear: the charts can change, right?
Yeah.
I have to be someone who can admit when things change. So far, they haven't, but I will absolutely come back on with you and be like, all right, they've changed.
How would they have changed? What would you look at that would tell you that they've changed?
So we basically, from the November high, you have this vertical kind of drop all the way down. And then since I think it's been the last 2 to 3 months, since January, we've been chopping sideways to slightly up. And if you connect the highs and the lows, they form this perfectly parallel kind of channel. As long as price is inside of that, it's classified as a bear flag, and the expectation is that it would break lower. All right, so now if we get above that channel and establish ourselves above that channel, that would be where I would start to say, okay, are things changing here? Now, maybe they don't, but I have to at least ask myself that question.
Okay, Gareth, so you're walking around the Bitcoin Miami conference, a lot of bulls here. Have you told anybody about your sub $20,000 price target?
I think many know already. I've seen them walking widely around me. They don't want to talk to me. I think I think I'm like the devil's curse over here. But listen, again, I think that remember.
I will say, and I'll let you speak. I will say that I've had a number of people come up to me personally and say, I've watched your Gareth Soloway interviews. Is he still bearish? Does he still think 20K is going to happen?
Just follow my Twitter.
I said, look, I don't make the price targets. Just go ask Gareth. He's coming on tomorrow. But yeah.
That's it. And I think it's important to remember, again, folks, is that midterm is like 3 to 6 months out there. If you look at past Bitcoin cycles, it tends to bottom between 12 and 18 months since the previous high. So you're talking November to maybe early 2023.
Right.
But I think it's important to recognize that if you map this out to the .coms and Amazon hit a high of 112 in 2000 and a $6 when the .coms busted. Where is it now? You know, 3,300, 3,400. So $6 to $3,400. That's in 20 years. I mean, think about what Bitcoin would do. Let's say Bitcoin bottoms out at even $10,000. Then multiply that out where Bitcoin could be if it follows the same thing.
I want to go back to your band of 40,000 to 44,000. Now, it seems that every time I talk to you, the trading range gets a little bit more narrow. Why is that?
So that's a great question. And basically what I'm doing is that every time you have these little, so we're in this range, right? It's kind of an upsloping channel here. Yeah. And as you jump up, you're kind of going a little bit here, then you're jumping up. And what it's doing is it's creating little pivot points, little areas where it kind of pulled back to and then jumped. Those create new support areas for us. So the band is the band. That's like the major level. So the 48,000-ish level to about, I think it's around 36 or 37. Those are the major bands. Inside of a band, you get lots of trading opportunities. Otherwise, I wouldn't have done any trades if it wasn't. I've done a bunch of trades since January if there were no trades inside of that. Okay. But my job is to get people opportunities, both long and short, and I've been able to do that with pivot points.
Okay. All right. Well, besides Bitcoin, what other cryptos are you following right now?
So I think Ethereum is worth watching. I mean, there's a major trend line if you connect all the lows going back about a year or so. As long as it stays above that, it's safe. I do worry about Ethereum breaking that line, but I don't think people need to be concerned until it happens. Solana is one that's interesting. It had a big pop recently. It's pulling back. I do have a buy level on it. I can't recall what level that is, but I will definitely mark that for our next interview.
Next interview. Why can't you spill the beans this interview, Gareth?
Because this is the one time where I don't have my charts with me. I feel naked. I'm
green screen this.
Yeah.
All right, fair enough. Now, Ethereum, what's your long-term vision for Ethereum? Is it going to surpass Bitcoin in market cap? Is the flipping going to happen, you think?
So my biggest concern with Ethereum is that it could be jostled out of the top lead by another cryptocurrency. I think Bitcoin remains the biggest, and it will be for some time because it's becoming the digital gold, right? Yeah. So you're seeing the likes of Michael Saylor, you're seeing the likes of so many big players getting in and basically saying this. While Ethereum has a huge amount of use case, what's to make Solana not take over? What's to make Avalanche? Or is there one that we don't even know of yet that could take over? And And that means that when I'm investing in it, I'm going to do slightly less money in Ethereum when I go long because of that risk.
Okay. Outside of the crypto sphere, let's talk about monetary policy a little bit. The Federal Reserve, we spoke about this many times, but since last we spoke, they've raised their interest rates one time. They're projecting a few more rate hikes down the line. I know your view on rate hikes, but I just want to ask you, for the people who haven't seen this, first of all, how many rate hikes do you think realistically can happen? And second, what is it going to do to the crypto markets? Because I've seen or heard of both sides of this debate. One, that interest rate hikes will really limit capital flows into risk assets like cryptos. And the other side of the coin, no impact because Bitcoin trades independently of macro forces. It's its own entity.
So right now, it's definitely a risk asset. So there's no doubt about it when you're seeing liquidity get tightened by Fed rate hikes, when you're seeing runoff on the balance sheet. Now they just announced $95 billion runoff. All of that is going to cause tightening within money flow into crypto as well as tech stocks and then markets in general. So you have to think that Bitcoin's going to take a hit. That's part of my thesis for why we're going to go lower. Now, you know that I've said that I don't believe the Fed will hike as much as they say they're going to because the economy's already starting to suffer. I mean, we have this nice reopening right now in the U.S. where lots of people want to travel and get out. But when you talk about, they just took away QE, right? Now they're raising rates. Now they're cutting back on their balance sheet. These are all tightening measures. So it's not that they're just tightening 25 or 50 basis points. They're really tightening more than that because they're removing excess money from the system, right? And that's going to be hurtful to the economy. I think by, again, probably the fourth quarter of 2022, you'll hear people starting talking recession. And in fact, I think Morgan Stanley might have just recently come out and said something about maybe a recession is on the horizon. But I've been saying that, and it's going to happen. I mean, there's no way you can take the drugs away from the market that it's been addicted to for now since 2009 and it not have a major impact on the economy.
Okay. So it's gonna impact risk assets to what degree? Which risk assets will be negatively impacted the most? Let's say stocks, cryptos, or I guess real estate might be another one. Mortgage rates are rising across the U.S. So what's going to get hit the most, do you think?
So I think housing is already starting to reverse and go down. Now, the positive for housing is that there's not a lot of supply out there. But at this point, I think I just read that since December, a $400,000 mortgage now is $400 more a month than just what it was in December. So I mean, that's just based on what interest rates have done since then, with the 30-year going into the mid fives, close to 6%. So again, you know, real estate's going lower, stocks are going to go lower, and crypto's going to go lower.
I'd imagine that with interest rates and mortgage rates going up, households have slightly less disposable income to spend on discretionary goods. Mm-hmm. Wouldn't that put a damp on aggregate demand?
It absolutely will. It absolutely will. I mean, think about what people are spending on inflated food and energy. Then you talk about home payments or rent that's gone skyrocketing. I mean, there's so much less money now. I mean, luckily people are getting raises in terms of salaries. That's offsetting it a little bit. But I want to say this is that, you know, and I'm going to look right at the camera to say this too, because it bugs the heck out of me, is that you had all these analysts since 2009 saying don't fight the Fed, right? I mean, how many times did we hear that for like 10 plus years, 12 years? And now the Fed is reversing and they're telling you that they're reversing and now people are like, oh, well, you still got to buy the market. Well, what happened to don't fight the Fed when we were going up? Now all of a sudden they're taking it back and now you do fight the Fed? I mean, investors need to be smart about this because there's a lot of money on the line. We are still so elevated from where we were pre-COVID, and the money is getting sucked out of the system very, very quickly.
So you think even with the pullback that we've had in the stock market since November, we're still too elevated?
Oh, absolutely, so elevated. Again, and again, I wish I had my charts with me, but if you connect the highs from like 2013 through 2019 or so, you have this upsloping trend, and then COVID comes when all the stimulus came in, and it's like, it just shoots up to the moon. And we haven't reversed that at all yet. And you have to reverse that. Even think about this. We're even going to get interest rates higher than where we were pre-COVID if we aren't already there. So it almost makes sense that it would even go lower. But yeah, I mean, we're going to go a lot lower in the stock market.
All right, so we're going to go much lower in the stock market. So are you short at the stock markets right now?
I am. I'm short energy stocks right now, Exxon, Chevron.
Yeah.
I have shorts on, I did cover, all right, so in all full and fair disclosure, I had shorts, was long UVXY, which is volatility. I sold into this latest drop we've seen in the stock market, so that's kind of being like short. And then I also took profits on Tesla short recently that we had just entered. But I'm still short by owning QID, which is an ETF that's 2 times short the Qs, and I'll continue to hold that because I do think we're going to go lower.
Kathy Wood's somewhere in this conference. If you could talk to her right now today and ask her questions about Tesla, what would it be? I'm just using her as an example, but I mean, a lot of people are bullish on Tesla.
Are you trying to start a war here? Jeez. Listen, more power to her. She has done amazing in building the everything she has.
Right.
I'm more of a shorter term trader. I think in this day and age, investors want that. So I think that, again, I'm in not a position to give her advice, but I think that, you have to, first of all, I think she's over allocated in some positions. It puts a lot of risk when such huge positions are in the ETFs that she has. But I'm going to shut up now. I'm not going to get into it.
Okay, all right, let's move on. Allocation is something you and I haven't talked about a lot. In fact, I don't remember the last time I asked you this. So 100% breakdown, what are you allocated in? How would you allocate your 100% breakdown?
So if 100% portfolio, I have probably about 40% short right now.
Okay.
All right. I have about 20% long, and the longs are spattered amongst, various plays that I think have quality to them. They're more defensive names at this point. And then I also have a fair amount of cash sitting on the sidelines. So again, that's really how I'm in right now. Now I do have a couple shorts on crypto. They're small, but I do have a short on Ethereum and Bitcoin that are in the money right now.
Okay, very good. Gold, let's talk about gold finally. And I have a question for you. So I've read research reports from a research firm, ANZ. My colleague covered this. Now they were saying, the economists of this research firm were saying that gold has a $300 geopolitical risk premium built in right now. Basically, if I could summarize their research, had the Ukrainian war not happened, gold should be about $300 cheaper than it is now. The implication is that if the Ukrainian war, with the war in Ukraine, de-escalates and somehow there's a resolution down the line, there would be less need for a risk asset like gold, and gold would fall by the order of $300. Do you agree with that analysis?
I mean, is that assuming no inflation? I'm not sure where this is coming from.
Yeah.
I don't see that as at all. Number one, you didn't see a $300 rise in gold, at least from where we currently are, with the invasion, even pre-invasion when it looked like it might be happening. So I think that, again, the longer inflation stays around, that's going to be the driving force. I know we've talked about the 1970s and comparing the inflation and the price of gold and what it did, and it literally, the charts are identical to 73 to 75, 75 to 77, which is where we currently are, and then gold went from it went to $900 an ounce from $150 or something back then.
Yeah.
I don't think gold's going to do that type of X move, but I do think it's got 5,000 in a few years written all over it. Absolutely.
5,000 in a few years.
Yeah.
What's going to hit? What's going to happen first? 5,000 gold or 500,000 Bitcoin?
Oh, that's a really good one.
Let's break this down. Think about the factors that are driving gold up to 5,000.
Right.
Think about the factors that are driving Bitcoin up to 500,000. Break it down for the audience, and let's role play which scenario is likely to happen first.
So I'm going to go with gold hitting 5,000 first, because I still think there's spec money in Bitcoin and it has to get more adoption. I think that you still have a lot of big money out there that is not comfortable owning Bitcoin yet. Now, over the next few years, I do think that starts to shift, and it's already starting to shift. And eventually, Bitcoin, think about the X times, right? You go to 5,000 on gold, it's only a little over, 1.5, 150% from here.
Yeah.
Bitcoin, 500,000 is a lot more than 150%.
Yes.
So I do think you will see eventually Bitcoin way outperform gold, but in the near term, I do think gold is the place to be. In fact, I remember our December interview where I said to you, gold would be the best performer in 2022 over Bitcoin as well as the stock market. I think so far I'm correct, as of now.
Yeah, as of now. Yeah, you got a few more months.
I know you're going to call me on that in December, though. If I'm wrong, I'm getting called out.
I don't even need to call you out. The people in the comments section call you. I don't need to do anything.
That is
true.
true.
But so far, your calls have been pretty good so far. And especially your gold calls so far. I'm surprised you haven't changed your call, because usually I called you Gareth the contrarian last time. When something runs up to a certain level, you start getting bearish, you start taking the contrarian side. I'm surprised you haven't turned negative on gold.
Yeah, so in all fairness, when we got up to 2,000-ish per ounce, I did unload some position in gold that was a swing trade, and I'm looking to buy it back around 1850. But I still hold my physical gold. That's not going anywhere, because I look at it as like an insurance policy. You know, if things get crazy in the world and the banks are shut down or anything like that, you know what? I'll go buy a loaf of bread and chip off a little piece of gold.
All right, finally, we're at the Bitcoin Miami conference. Big convention, big. A lot of people here. I don't want to misquote, but a lot of people, tens of thousands. You have been walking around. A lot of people avoiding you because of 20,000. But the people who you have talked to, what have you learned?
That they're appreciative for the non-biased information that I give out, the technical information where it's kind of avoiding the hype. And listen, as much as I'd like to see Bitcoin at 500,000 tomorrow, I just look at the chart and let it tell me what it's going to do. And I think that's important. You know, there's so much hopium out there, and it got a lot of people to buy at 65,000+. And those people are underwater quite a bit. And again, that's a lot of this moon boy kind of nonsense out there. And I really stress to people, think logically, right? You know, it's not the last opportunity you're going to get to invest in anything. So think logically. Don't be a follower. Be someone who steps up at certain levels that makes sense.
Gareth, I've been hearing some bullish calls. By bullish calls, I mean $10 million Bitcoin. Just walk me through from a technical perspective whether or not that could happen.
I mean, anything is possible. I mean, if it became the reserve currency of the world and transactions were done in Bitcoin, then I suppose it could. For me, it serves me, you know, it's one of those things where I don't want to say it and I don't want people to kind of think about that, because we need to be focused on now and where price is going to be. Like you say $10 million or whatever, then people are going to go out and buy right now, right? And it doesn't, like, let's play in the near term and set yourself up for the long term. But again, if that sort of thing happened, yeah, it's possible.
Well, I mean, look, the price target is 10 million. Even at 9 million, I would still buy, right? So, all right. Well, anyway, Gareth, great to see you in person.
So good to see you.
Wonderful to see you, man. I wish you all the best at the conference, and I'll speak to you again soon. We'll do like a more educational piece.
I look forward to it.
All right. Thank you very much. And thank you for watching Kitco News. I'm David Lin.
Kitco News special coverage of Bitcoin 2022 is brought to you by Coin Payments. Crypto payments made easy.